5 commodities to trade for profit. Good day, all stock market traders and investors. This is Total Investor. On this YouTube investment channel, what we normally do is that we provide for you trading opportunities using charts, using technical analysis to determine what to buy and sell. And it's usually about stocks, commodities, and sometimes even cryptos. Today we're going to look at commodities. Okay, we've got several charts that I'm going to bring to your attention that I think warrant a look over and maybe even taking a position one way or another. Okay, please keep in mind that everything I say should be thought of only as for educational reasons. Okay, should not be thought of as financial advice. And please watch all of the video from beginning to end. That way you get to see the entire all the chart patterns that I bring to you. If you have not already done so, please subscribe to this channel by hitting the subscribe button. That way you will be notified when a video is posted to YouTube. Okay, so let's start off with the very first chart, and that is of the US dollar, the US dollar index. And we're going to be using the December 23 contract. Okay, the symbol is DXZ23. Now that may vary depending on which system you use, but that is what it is on my system. What I've drawn, this is a 6-month chart, and what I've drawn here at the 103.82 level, I've got a coming across here where because it touched or it came close to this level. So this was a important level of resistance. Okay, came back down, up, touched it, resistance again, finally broke through. So when that happens, this now becomes a level of support. Okay, came back down a little bit, not quite to the level to touch it, but it did become support. And if we see now, what does the dollar index do? It comes back and touches it over the past 2 trading days. Okay, now the big question is, does it stop here? Does it bounce? Does it go through? Well, we've got a little bit of conflicting signals here, because if we look at this green moving average, the line here, it's actually a moving average of 10 days. Okay, we can see it now moving down. It does work quite nicely. Moves up when the contract value goes up, down, so it doesn't get the entire 100% of the change, but it gets most of it, especially up here. Okay, followed it along all the way up, moves sideways as it was consolidating, and now we're starting to slope downwards. Okay, so that tells us we've got move on the downside. The RSI sloping downwards. That tells us it's going down on the downside. It's even below the 50-day moving average. That tells us it wants to move down, okay, especially on a crossover. However, with this particular line, which the support line, maybe we've got a little bit of a bounce coming, and then coming back down again. It goes through it on the second time. On the second attempt. Okay, at least that's what I think will probably happen. Okay, so that is it for the DX or the US dollar index. Margin on this particular contract, are probably talking about $2,000, give or take, depending on who your broker is, and every 1 full point. In other words, so if it goes from say 104 down to 103, that's $1,000. Okay, or 104 to 105 would also be $1,000, depending on whether you're going long or short. So keep that in mind. So it doesn't take much to double your money or double your margin, or 3 times, 4 times. From here, if you bought it at 99 and sold it at 107, that's 8 points or $8,000 on your $2,000 margin. Okay, so 4 times profit over your margin. Not bad. Next, Lean Hogs, February 24 contract, HEG 24 is a symbol. I don't have any lines here simply because there are some commodities that don't work well with trend lines, because they're very they zig and zag, and that's what we've got here. But one thing that does work quite well is a faster moving moving average. Okay, this is the 10-day, and what we've got here, just most of well, I want to draw your attention to the most recent data or price figures here. As it made an up move, didn't close very well, tried it a second time, failed, did not make a new high recently, came right back down. So now we are below the 10-day moving average. Big red candle, and we've got the RSI that was above the 50, but now touching the 50. And all we need is one more red day, not by much, and it will be below that. Plus, we also have the stochastics that didn't quite make the new high. It too failed. It made a lower high, and they have crossed over to the downside. So this is leading me to believe that, at least with these indicators, that lean hogs could be looking for lower numbers. Okay. Next, this is a slightly different format here that I've got. I do apologize for you won't be able to see the entire screen here. This is the coffee March of 24, KCH 24 is a symbol. Again, I'm trying to keep this very clean without too many lines, but these are just two moving averages crossing. They do work quite well. Selling it here, buying it back, selling it here when they cross. A little bit of maybe a slight loss position as it consolidates. Selling here when they crossed again here, and this is all a one up move. So if you time them when you get the crossover on these moving averages, they do seem to work most of the time. Nothing is guaranteed 100% of the time. Unfortunately, that's just the way it is. But this one seems to be working quite well. So we did have a little bit of a pullback here. We've got some support. It broke through this level, the 168 level, where it met a previous high. Okay, high bounced off, broke through, and then the 168 level became support. So now looks like it wants to move higher. We got a good close today. So as just looking at this particular indicator, it's my opinion that coffee will be seeing higher highs in the next short-term time frame. Okay. Next, we've got canola, January of 24, RSF 24. Again, one trend line that I have here is just the just showing the lower lows in the commodity. So as it's making lower lows, up here we've got the RSI making higher lows. So it's giving us a bullish divergence. And as I've said many times, that is usually a good indicator that the present trend, in this case downwards, will be ending soon. Okay, and it did move sideways for a bit, and now we're moving higher. As you can see with the sloping of the moving average, it's upward. The commodity is now trading higher, touching the intermediate term moving average. Plus, we also have the RSI not only moving upward but breaking the 50 level. Okay, so this indicator, this is just using this green moving average that I have here, which I believe is the 10-day moving average. All you have to do is follow that. In other words, buying it when it crossed above it and selling when it closed below that, you would have made money. Okay, maybe a little bit of a loss here, that's fine. So a small loss here, but all this is profit, and down here is profit. Plus, getting in over here, you're now in the money on that one too. Okay, so just this one indicator, the moving average, could have made you a lot of money over that 6-month period. Okay, so again, my feeling is that we could be seeing higher prices in canola. Now, I know that some of these commodities sound pretty boring, but to me, I don't care what it is that I'm trading as long as I can make money. Next, we've got sugar. Okay, again, 6-month chart patterns. And what I drew here was just basically a bearish wedge. Okay, first look at the top here. It made a high here at mid-September, and it kept on making higher highs here till the top. The highest high was early November. But looking up here with the RSI, the highs kept on going lower. So the trend is actually lower, even though the sugar prices were moving slightly higher. So that gives us a bearish divergence. Okay, so it's telling us that the trend is going, there's a strong indication that the current trend would be ending, and it looks like that has already happened because as I drew another upward sloping trend line here. It broke it just a couple of days ago. Okay, and now we are definitely below that trend line. So we've got an RSI that is below 49, sloping downwards below the downtrend line, breaking of this the wedge, and it's also below the moving average. Plus, the stochastics are turning down below 50. Okay, so that tells me that we're probably going to be seeing sugar prices lower than they are today over the short term. Okay, so that is the 5 chart patterns that I brought to your attention. Again, I know that futures, commodity futures, is not for everybody, but you might want to consider looking into them simply because there are advantages, and one big one is it uses margin. So you only have to put up a little bit of money, but the potential to make money is there, and you can make not just 10 or 20%, but you can double, triple, quadruple your money in a short period of time, as I've mentioned to you with this US dollar index specifically. But it goes with it's the same with all commodities. Okay, so I will be bringing more of these to your attention in the future. If you want to see more, please, in the comment section, tell me that you do. Also, a big thumbs up if you think it deserves it. And of course, subscribe to the channel. Okay, so having said that, I will see you in the next video. Thank you.